Hey, my man, how's it? Um, good, 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 good. If you can confirm for me, please, if you can see my screen, you should be seeing the Nasdaq chart. I think it's the 1 minute chart, and also if you can hear my voice. Okay, you can just confirm that for me, please. That's just an email I'm quickly drafting while we're waiting for more people to join. But can you please confirm for me? Okay, sweet man. Let's give me like 5 more minutes. I think we should have more people. In the meantime, you can maybe let me know what challenges are you experiencing, what issues are you currently experiencing in your trading, or in what we've discussed. What is that thing that you're struggling with the most, so I can see if I can assist you with that. Okay, so we'll start. Okay, so we'll start. So basically, evening, guys. Ish. Sorry, had a hectic day, man. Had a hectic day. I had a hectic day. So, looking at what we've been discussing thus far, I think it's safe to say that I have given you guys, I don't, yeah, I think enough for you guys. I think I've given you guys enough, what can I say, information for you guys to basically take this and move it forward. I think this would be enough for you guys to go forward. Okay. So, right now, today's discussion, I want to be discussing the the market structure shift with you guys. Okay. Yesterday, I discussed with you guys about order blocks, right? We discussed order blocks and specific levels that you need to look at in order blocks and how to find those levels. And I think the reaction on price action yesterday basically showed you guys what is it that I'm talking about when I speak of such, right? So right now, I'll just review it quickly. Won't take time because it's something that we did yesterday already, right? Something that we did yesterday. And if you guys can be kind enough to watch the previous day's video, and you'll see exactly what I'm talking about in terms of that. Now, what did I say to you guys? I said the market is currently at a what? The market is currently at a, we are currently at a bull market, right? We're currently on a bull market, meaning, what is this thing doing? We are currently on a bull market, meaning that the market has been constantly going up. What people would say is that this is an uptrend, right? This is an uptrend. This is a channel, or whatever you want to call it, right? We are currently on an uptrend. Yes, you can trade this thing with this channel saying, okay, close this here, but there needs to be a reason why you think the market is going to bounce at a specific level. You should not really be trading this based on your support and resistance because, in essence, this would be a diagonal support, if I may say, which is this level over here. However, yesterday I brought you guys, I gave you guys attention to a very specific level and for a very specific reason, saying if we're on a bullish market like this, right? If we're on a bullish market like this, right? I want to see bullish arrays being respected. If the market starts disrespecting bullish arrays, then I start basically questioning if the uptrend is still valid or not, right? And I said to you guys, what bullish arrays do we have on this specific market, right? And this specific market has what? I brought you guys attention to this order block, and this is the reason why I discussed my order blocks with you guys yesterday because I didn't want to come and say, yeah, we bounced on a bullish order block. I wanted you guys to see a bullish order block, an example of a bullish order block, and I gave you an example of bullish order blocks and said you guys can go on the platform and check for bearish order blocks. But another thing that's very important that I need you guys to understand is this. If you see bullish order blocks and bullish fair value gaps in a bearish market, you do not want to see those being respected, right? You do not want to see those being respected. Why? Because you're in a bullish market. You want to see them being broken. If it's an order block, you want to see that order block being respected, disrespected, and act as as a breaker block. If you see a fair value gap, you want to see that fair value gap being disrespected and act as an inversion fair value gap. That's how you confirm that the market is in your direction is basically strong, right? I said to you guys, there's three levels that you need to look at an order block. I said it's the opening price, which is where basically the order block starts. In that example, this would be over here. Obviously, this is a bearish candle, opened at the top, closed at the bottom. So where this thing starts, this is your what? What is this? This is your opening. So this is going to be a sensitive level, right? And then we also have what? 50% of that level, which is somewhere along these lines, right? Somewhere along these lines. I brought you guys attention to these levels to be exact, right? Brought you guys to, I brought attention to you guys at these levels to be exact. To these levels to be exact, right? I said price is, you want to see how price basically reacts within this range, right? Cool. Now, I also jumped to the weekly chart, and on the weekly chart, we paid attention to this level over here, which is this spike. I said this spike is also going to be a gap, and we want to see how price is going to react at the 50% of this spike, and that's this level over here. That's these levels over here, right? So these are the levels that I brought you guys attention to, and I said now just because price is coming to these levels, This doesn't necessarily mean, and that's what I want to discuss with you guys today. Just because price is coming to this higher time frame bullish arrays, this doesn't necessarily mean that you guys will go in and buy the market. You then want to do what? You then want to switch to the lower time frame, right? You then want to switch to the lower time frame. It's the 22nd today. We're looking at the 21st. So the 21st, that's here. The 21st starts here and basically ends here, right? So this is yesterday's price action. Now that you see that you're at a specific level, we're at a specific bullish array, right? You then go down to the lower time frame. On the lower time frame, you should be seeing these things that I'm about to show you now. Okay, so when price got to those levels, price did what? Because we're already at the levels that we were talking about, which is our bullish order block on the daily chart, the CE of the weekly spike, and almost at 50% of the bullish order block on the daily chart. Okay, now once we got to those levels, now we want to see how price is going to react at those levels, right? And then if you can notice what price did in that case, then we came and took out what? Sell side liquidity over here, right? We came and took out sell side liquidity over here. So this would be our stop hunt low. And then price shifted up aggressively, right? Started moving up. Now look what's happening. Price is now disrespecting bearish arrays. This was supposed to be a what? This was supposed to be a bearish, meaning when price gets to this level, if we were bearish, it was supposed to bounce and go the opposite direction. And if you pay attention to this level down here, we have a bearish fair value gap. If this price was bearish, it was supposed to hit this fair value gap and go the opposite direction. But because price is bullish and it has reached the higher time frame PD array, which is that order block we spoke about, and the CE on the weekly chart that we spoke about, you will then start seeing price disrespecting these bearish arrays. When it starts disrespecting them like this, and very important, we have a swing high over here. We have a swing high over here. We have a swing high over here. So we have 3 swing highs taken out, right? Price aggressively shifts up, takes out this swing high, this swing high, this swing high, and this swing high. So when price does this market structure shift, this is basically what I want to discuss with you today. MSS, market structure shift. Okay, market structure shift. So if we have this market structure shift over here, what we are then anticipating is that, okay, now price is showing us, it's tipping its hand saying, hello, I'm changing direction. We are no longer going down. We are now switching direction to the upside, because it's showing you that it's breaking all these bearish arrays and doing what? Changing the market structure to the upside, right? And when it does that, price basically does what? Shoots down, hits a fair value gap. Now, in an ordinary market, maybe this fair value gap would have held, right? In an ordinary market, maybe this fair value gap would have held and price would have shot up. But because of fundamentals, we had FOMC yesterday, of which I advised you guys that we do not trade the FOMC. We can only trade what? 15 to 30 minutes after the FOMC release. Okay, so once price did that shift in market structure, the breaker block over here, price shifted down, came back. This is a breaker block. You could have taken your entry somewhere here, right? Normal conditions, not FOMC. Any other fundamentals, you can take the trade. If you are trading prop firm, be careful of that. You do not want to be trading any high impact news on some prop firms, okay? Because they do not allow it. Okay, but if you're trading your personal funds, this is fine. This is not a big deal. Okay. But if it's FOMC, like if it's unemployment claims and stuff like that, this is a trade that you would have taken. Okay. But your entry would have been where? Your entry would have been where this block starts. And then your stop loss would basically be somewhere down here. Okay. Obviously, what I taught you guys is that your stop loss is going to be somewhere at these levels. But since this is FOMC, yes, you could have taken this trade. But since this is FOMC, this thing could have easily spiked down here, took out this low as well, and then just went up, simply because it's that type of a market conditions. Okay, cool. But once price starts doing this, when it starts giving you this market structure shift over here, give you this bullish fair value gap. If you notice, we had a bullish fair value gap, and an inversion fair value gap over here. Our inversion fair value gap would be this one. Our inversion fair value gap would be this one, right? Our inversion fair value gap would be this one. And since we have this inversion fair value gap, it comes back to this fair value gap as well. This could have been a possible level that you would have entered on. However, the market sometimes doesn't go back deep to these levels. Okay. Usually it would have actually bounced at this first fair value gap, which is this one. That's why I'm saying to you, sometimes you do not want these clean entries where you get it exactly where it turns, where you get it by the pip. You can wait for it and see the reaction at this second fair value gap, and your entry would basically be here, and then you would basically ride that market up. Okay, to your specific levels that we're looking at. Now, what would then be a level of interest for us in that kind of a setup? If we took it here, where is the next level that we could basically look at for taking profits? Right? Let me delete this. This was just me showing you guys yesterday's trading. The first level of you guys taking your profits would be what? This fair value gap over here. We have a CB over here. We have a CB, a bearish fair value gap. So the minute price hits this fair value gap, you could have taken your partials and say, okay, I'm taking my partials, I'm going out. And then the second level would be basically what? This one. The next level of interest would basically be what? This high, right? We have buy side liquidity. This is an inversion, so this is a fair value gap. So price can basically reject at this level and start going the opposite direction. So you taking out some of partials here and moving your stop loss to break even would be actually good trade management. Okay, the next level would also be this fair value gap. You can basically take your partials there, but depending, this is the higher time frame. This is the 4-hour chart. Okay, so you would probably look at your lower time frame, but I'm just giving you guys an idea of what you could have done. Okay, and this level over here, these are the levels that you can basically use as your drawn liquidity. But ultimately, we want price to do what? To come back and take out the highest high, because why? We're in a bullish market. We're expecting these highs to be what? To be disrespected. Why? Because we're on a bullish market. Price is supposed to take out buy side liquidity and continue going up until price actually proves to us that it's done with the upside. And I did tell you guys that an inversion level, an invalidating level for me in this kind of setup, or in this kind of what's this, of a market, when you see this market being very bullish like this, what I would basically want to see is, I want to see higher time frame bullish arrays being disrespected, like this level. I mean, like this order block over here. If I saw this order block being disrespected, being violated to the downside, this would be now saying, okay, chances are the market is done with the movement to the upside. It's now going to do what? It's going to shift direction and start basically moving the opposite direction. Okay, these are the type of things that you guys need to do. Okay, and then also you can go on the weekly chart and do what? And check for these kind of things. Guys, it's the same thing that you are analyzing. It's just that now you're analyzing it on the higher time frame. Okay, this fair value gap, 50% of it, which is partial of this fair value gap, has already been closed. So we would also want to see price doing what? Violating this fair value gap and going down. However, the best place you also see on the weekly chart is if we violate this bullish order block. If we violate this bullish order block and close below it, then it's now tipping its hand to you guys again and telling you what? And telling you that we are done with the movement to the downside. Now to the upside. Now price is basically switching direction to what? To the downside. Okay. So it's not really that complicated to get. It's basically just you guys understanding the basics. Okay. It's basically you guys understanding the basics. Kevin Trudeau said something very interesting. Kevin Trudeau said, a master is someone who has simply mastered the basics. So if you know what your basics are, and you're saying, okay, what is a fair value gap? A fair value gap is a 3 candle pattern. If the first and the last candlestick, the wicks do not touch, that gap over there is a fair value gap. That's the first basic. Now, which fair value gaps do you use? Your fair value gaps should be based on time and price. What's most important? Time is more important than price. Time being what? Time of the day, time of the week, time of the month, time of the year. This goes to now seasonal tendencies and all those things. So time is very important. So you need to understand which time are we what time what ngizama ukuthola igama lesilungu la, it's not coming to me, but which where are we in the market? What time of the day, of the week, of the year, of this? Where are we? What time is it? Because that's very important. That basically tells you what's basically going to happen. It tells you if this fair value gap is going to be respected or not. It tells you if this inversion fair value gap, this order block is going to be respected or not. Time is very important. And if you actually, I don't think most of you guys pay attention to, these things that I'm talking about, because I don't really get a lot of questions about that. The time aspect of trading. I swear to you, if you can look at the time aspect of trading, I taught you guys the other week, what is this? I always forget this term. The silver bullet of trading. I don't know if you guys really understood what I was talking about, and I gave you guys specific times that you can actually be trading these things. Okay, so those things are the ones that actually tell you if these levels are levels that might be respected or not. Okay, and remember all the time, the higher time frame is what's going to tell you where the market is going. The lower time frame is going to give you confirmations for entries. Okay, and this is how you use it. Like what I just showed you now, you go on the higher time frame, which is your daily chart in this example. Go on your higher time frame daily chart. Check where your discount and premium arrays are. If you are at a discount or if you're in a premium array on your higher time frame, and you look at the time of the week, if it's a Monday, Tuesday, Wednesday, usually price usually goes the opposite direction. So obviously, you know the power of three, right? Power of three is basically the opening, manipulation, distribution. Monday is usually the consolidation, right? Accumulation. And then Tuesday usually gives us the manipulation, which where price basically goes down. Sometimes it happens on Tuesday and Wednesday, like it happened this week. Okay. Tuesday and Wednesday, price gave us that manipulation. What is that manipulation that this guy is referring to? This is the manipulation, right? Let me show you that. But when I'm saying to you guys, time is very important. What time of what price, what day is it? So this was what? This was Friday. And this, oh, Monday is not showing here because Monday was a holiday. So take a look at this. Tuesday, price went down, right? Wednesday, price did what? Shot down again, took out Tuesday's lows, bounced, because remember, Tuesday could have been the low of the week. However, the reason why I didn't think Tuesday was going to be our low of the week was simply because Tuesday's candle failed to get to our what? To our bullish array. What is our bullish array? Our bullish array is this fair value, this order block that we discussed. Okay, when price gets to this order block was on what? On Wednesday. So that's when it now gives you confirmation that okay, Wednesday would be possible that it gives us the low of the week at a bullish array on a bullish market with buy side liquidity that you can already see. So Wednesday gives you low of the week, which was basically what? Monday accumulation, Monday, Tuesday accumulation, Wednesday accumulation, Wednesday stop hands. What did I say? Accumulation. I forgot. Okay, sharp. Stop hands. My head is busy. Sorry, I sometimes forget these weird terms. But you guys, accumulation, manipulation on Wednesday, distribution today on Thursday. Distribution is where you're going to get the most moves, basically. So on Wednesday, Tuesday, Wednesdays would be good also to trade. Monday is not the best, but sometimes Mondays do give you basically good price action. Okay. And then price starts doing what? Starts going up. Now I want you guys to pay attention to what I just said, and I want you guys to pay attention to what the market is doing right now. Over here, we have a bearish order block, right? And this is what I just discussed with you guys now when I started this session. We have a bearish order block, this green candle before price started moving up. But why are we not looking at this and saying price is going to get to this bearish order block and bounce and go to the opposite direction? Because we are in a bullish market. So we are expecting these bearish arrays to be disrespected. So if price breaks this level, I would then do what? I would then expect it, since it has broken up, I would then expect it to basically come back, retest this level, continue going up. See? So it's literally, I know it sounds complicated, but if you put in the time, you will actually see that there's nothing complicated about this thing. It just needs you to have a lot of discipline, a lot of patience, and a lot of time in the charts. Okay. So the reason or the advantage that I had when I was trading, when I was doing this basically, is because I already have a lot of experience in trading. So a lot of things I can already, it's easy for me to see. So when you teach me something, it's easy for me to catch up to that thing. But if you do not have a lot of experience, it becomes a bit more difficult, which means you need to put in the hours, guys. Okay. You need to put in the hours and watch the markets and see these things as they happen. You need to anticipate. You don't even have to trade live, right? You just have to watch, not even trade on demo. You just need to watch and anticipate, mark your levels, and have a reason why you are marking those levels. Okay. Those are the things that you guys need to be doing. But it's not that complicated, I can assure you. But in terms of what we've just covered, what else is it that you guys would like to discuss? Where did I leave? Where did I lose you guys in terms of what we've covered thus far? Where did I lose you guys in terms of what you covered thus far? Is there anything that you guys are not understanding in what we've done? I believe that what we've done is simple. Like I tried to like really break it down to like the simplest way possible, where I give you guys, because the first thing that I did when we started hosting these sessions, the first thing that I did, I showed you guys how to enter a trade, right? I showed you guys the market structure shift, the kill zones, uh, market structure shift, kill zones, and drawn liquidity and all those things. I showed you guys those things because they are the easiest. Well, I think they are the most complicated to get. Once you understand your entry model, you now know how to enter, right? And if you know how to enter a trade, it becomes simple. But okay, I know how to enter. Now I need to apply something else. What is it that you basically need to apply now? You then go back to the fact that if 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 you know how to enter a trade, right? If you know how to enter a trade, now you need to know that the higher time frame is actually not the lower time frame. The lower time frame is just for confirmation. The higher time frame is basically the driver of the market, right? It's the one that's basically telling you what price is going to do. Okay, so if you trade along with the direction of the higher time frame, it makes things easier for you. If you know which days to trade and which days not to trade, this thing becomes easier for you. Okay, so these little things are the things that you basically need to know, and you will get them kancane kancane. I showed you guys that 10:30 thing, right? Not 10:30, the 8:30 being the opening, the 9:30 being the stop hands. And I showed you guys how to use these things. And then I traded live with you guys to show you again how to continue using these things going forward, right? We'll host, let me just check something. We'll host live sessions again going forward. This week, I didn't host much simply because of the type of week that we had. I used I used this week I used this week a lot. I used this week a lot to do my personal stuff because I wasn't there was not really a lot that needed to happen. Okay, no, this is still this week. So 25, which is next week. Okay, the 25th. So from next week, the 26th, Monday you could trade, Tuesday you can trade, Wednesday you can trade. No, sorry, Thursday, Wednesday, Tuesday, Monday, not so good. But Tuesday, Wednesday, Thursday next week, you can basically trade. Friday as well if you want to push it. But those 3 days are enough for you guys to basically meet your weekly target. Okay. So that's the first thing I remember. I told you guys that's the first thing that you look at. Which days am I trading this week? What days am I trading this week? Go in the economic calendar. It's going to tell you exactly which days to trade and which days not to trade. Okay. So it's basic knowledge in terms of what we've done. But I know it can sometimes be complicated for someone that's still new and still trying to figure this shit out. Okay. That's why I'm always here to answer your questions and I'm currently enjoying this. I'll be moving the platform to Telegram. I think as of next week, I'm just basically planning around this whole thing. Okay. So as of next week, I think we'll start moving everything to Telegram and just basically see how things will go from there. But then, do you guys have any questions? Let me give you guys 5 minutes in terms of, again, I don't want to make, we've done this, okay, we're on 38. I know we spent about 8 to 10 minutes not being active. So we are around 30 minutes of session of information. And I believe that should be sufficient so that I don't confuse you guys and give you also enough information for you guys to be able to process. Okay. But before we close the session, what questions do you guys have for me so that I can be able to answer them? And if there's no question in the next 3 minutes, then we will consider this as a successful session. I would assume that you guys uh, understanding what I'm saying. And I need you guys to send your analysis on the group and everything. Okay. So yeah, do you guys have any questions or anything that you any even if it's a pair, a setup that you would like us to look at? Okay, outside of what we always look at. Remember, I told you I don't do forex anymore. It's just futures for me, but the market is essentially the same. And if you are still trading forex, of which most of you guys are, Euro USD and GBP USD are good to trade. GBP JPY is also very good to trade. I traded GBP JPY a lot actually, and it was very good to me. Okay. I only stopped trading Forex this year, like literally in Jan. I decided, fuck Forex. Let me just move to futures. Okay. Pardon my language. 2 more minutes before we close the session, before we call it a night. If we do not get any, if we do not get anything from you guys. And again, if you guys are finding value from this, just hit the like button, subscribe, open your notifications, and I promise I'll give you guys better quality in the next. I'm just working on that. I'm just working on taking this thing a bit more professional than I did before. Um, yeah, I'm working on taking it a bit more professional because I mean, yes. So I'm gonna improve my quality, and I mean my quality in terms of mics and cameras, cause yeah, mics and yeah, stuff like that. I'll invest in that in the next week or so. They should be, yeah, I think they should be here in the next week or so, and we'll start basically having better quality videos. And I'm still trying to figure this YouTube thing out. I tried this YouTube thing a couple of, I think 2 years ago, but it was more on podcasting at the time, not really live trading and everything. I was not into that. But I think this year I'm more settled. Yeah, I think I'm more settled that I can actually be able to trade live. I was not used to trading live. Actually, I've never done this live trading thing anymore. But I think it's actually very helpful to people who are still starting out, so that you can basically know what you are looking at and how to interpret these things as you go. Okay. So I think those are quite helpful. And even if you're not able to tune in, but just watch and see, when do we take a trade, when not do we take a trade, which days do we not take a trade, even if we're live and we're looking at the market. Because just because you're in the market doesn't necessarily mean that you need to trade. Anyways, this is becoming a lecture. Guys, please hit the like button, subscribe, hit a comment, and I will see. Oh, you can actually share with this with your other friends as well. But then also, I want you guys to know that this is not financial advice. It's merely just my experience and for educational purposes. Do not take this as financial advice, as forex markets is very, very risky. For compliance purposes, guys, this is it from me. Good night.